Hi, good afternoon, everyone. Welcome back to the channel. We are once again joined with Will Rhind of GraniteShares, and this time we can actually talk about YieldBOOST because we've got some of the funds out. So, Will, welcome back. So glad to have you back on.
Yeah, thank you. Good to be back on.
Yeah. So, would you like to just start out and just tell the audience about YieldBOOST at a high level and your thoughts and how it's going so far?
Sure. So YieldBOOST, as some of you might know, is our range of high yield income ETFs. And they're similar in concept to a number of other strategies out in the market that are selling options to generate income.
Like Yield Max, Roundhill? Yeah.
Exactly. Yes,
Yeah.
exactly. Now, the twist is that what we do with YieldBOOST is we sell options not just on stocks, we sell options on leveraged ETFs. And so that means that for any given stock, for example, you might have twice or two times the implied volatility, and therefore you have the potential for a lot higher yields.
Right. And those can certainly move either way, but
Yeah.
when they go up, absolutely, it can boost the yield, as the name says. Um, Now, how many are out so far? I know we have TSYY.
Yep. So
Yeah,
we launched TSYY was the first one. So that
yep.
is on the underlying Tesla levered ETFs. And then we just launched YSPY, which is on underlying S&P 500 leveraged ETF, and TQQY, which is on the underlying TQQQ ETF. So both of those levered ETFs referencing the Nasdaq and the S&P 500, and then of course you have the Tesla with TSYY.
Hmm. Great. So, and which fund is that one? The underlying for that, is that the stock itself?
So they're all leveraged ETFs. So you have the TQQQ for the Nasdaq one, and then for the YSPY, it's the underlying. It's a ProShares S&P 500
Oh,
leverage.
it's the U Pro.
It's S. Remind me 2 seconds to make sure I give you the right information. I think it's
Yeah.
SPLX.
Oh, SPL. Oh, that's right, because U Pro is a different company.
Let me see. Yeah,
That's the one.
yeah.
And then you,
YSPY.
and then you have your own levered ETFs too.
Yes,
Yep.
and so it's interesting because if you look at, for example, the TSYY,
Hmm.
TSYY now has two distributions, but the distribution that we just made at the end of February,
Hmm.
that's just over 160% in terms of annualized yield.
Phenomenal. Yep.
Yeah, so I mean, really, really now starting to see the impact of YieldBOOST.
Hmm.
And then YSPY and TQQY just launched, so they'll be making first distribution kind of at the end of March.
Hmm. Now, are you able to capture the upside and the downside on these?
Well, with any of these strategies, the upside is typically limited because
Yeah.
you're selling puts. In our case, it's selling puts. So your upside is typically limited to the amount of premium that you capture. In this case, it's significant. And then what you're trying to do is manage more the downside. So by either selling puts that are out the money, or in the case with some of the yield boost strategies, buying a put that's out of the money. So it's trying to manage a bit of both, but the upside definitely is more limited to the amount of income generated.
Right. Very similar with like Yield Max and others.
Exactly. It's just the thing to think about with yield boost is that when you use a leveraged ETF, which itself is 2 times leveraged, 3 times leveraged, the amount of implied volatility is going to be 2 times or 3 times, and
Right.
therefore the amount of income or the amount of yield could be 2 times. So it's just That's the benefit of doing it over underlying stocks.
Right. Now, I've noticed because I'm looking here for TSYY, it seems like the price of the fund was fairly stable up until February 20th when everything kind of started coming down.
Yeah.
Yeah.
Yeah, there's been a lot of volatility, as everybody knows, and indeed the strategy is evolving because as we get more feedback from people saying that they're looking for more yield or looking for different attributes, we're evolving. So that's also part of it.
Mhm. So then, like on this one, you're able to capture most of this downside?
Um, in terms of capture, then yes, you're just being subjected to, or you're being able to participate in the downside because
Yeah.
those particular days probably were days when Tesla has had some pretty big moves to the downside.
Mhm.
So if you blow through whatever buffer you have to protect against the downside, then yes, you'll become more correlated to the price of the downside.
Right. And then the others are so new, they haven't had a dividend yet. I think
Right.
we've
They
only
just launched.
yeah. Yeah, so we've only seen one from TSYY so far.
Yep, that's right. TSYY was on two, so it was I mean, technically it was
2, yeah.
technically three, but the first one was in January, second one February, and obviously now we'll have this one in March with the other two funds, the broader basket ones.
Yeah. And so YSpy just launched on the 27th, it looks like, so we're only been trading for a few days.
That's right, and it's the same
Mhm,
same with TQQY.
mhm. So we've got 3 total,
Yep,
and there's a lot more planned.
that's right.
Yep.
So yeah, just trying to roll these out.
Yeah. So it's interesting. These took actually a while, to go public,
Yes.
and this had to do with a lot of, like, regulatory and compliance things.
Yeah, it's a combination of factors, but certainly one aspect of it is that when you're doing something for the first time with any regulator, it typically takes longer.
Yeah.
So the fact that this, although they're selling options and selling options is not a new concept, this is a new concept because the options that are being sold are options that derive their value from underlying leveraged ETFs. So
Right.
that's a new concept. And therefore, that took a bit longer to get through. And the other aspect to it is that we as Granite Shares have just been growing like crazy, on the leverage single stock side of the business, and so there's just been huge sort of demands in our time from that side in terms of managing the existing business, but also bringing new funds to market. So it's like a combination of factors. But now we're starting to roll these out and can hopefully get a bit of a cadence here in terms of bringing some to market.
Yeah. Oh, and I think the hardest one probably was the first one. So I've noticed since then, I mean, you're churning them out faster now.
Yep.
Yep. Okay, good stuff. Yeah, I'm excited to see how high our dividends can be with these 160%.
Yeah.
That's very good.
Yeah, and
Um,
in some respects, what's great about these is, some people talking about, or I guess, some people might ask, well, why did you do this? And when we did the levered single stocks, what we noticed quite quickly was a strong options ecosystem building around the products. And then you have to ask yourself, okay, well, who's trading these options? And turns out that there's a lot of people who are doing similar strategies but doing that themselves. And so again, the idea is just like you've seen with YieldMax and the competitors saying, well, why don't we actually just wrap that in to an ETF strategy ourselves, and people can just buy a one ticker solution where we're providing the income that people are doing from selling puts or a put spread, whatever it may be, and just delivering that in a package to people.
yeah, yeah, that makes sense. Now, I noticed you said that you have a lot of demand for your own levered ETFs as well.
Yes.
I'm looking here. Let me switch to this screen based on the AUM. Let's do this. So it looks like I'm thinking AMD. There's a lot of demand for. funds like the AMD one.
Yep. AMD, Palantir,
Oh, of
Nvidia,
course.
Tesla.
So I was just sorting it here. Oh, there's a gold one.
Yeah.
Let's see here. Trying to sort it.
Yeah, that's
Oh, here we go. Yeah. Oh, YSpy and TQQY. Two of the yield boosts are already up there.
yeah.
And then Coinbase, Qualcomm. Oh yeah, Palantir, Meta as well.
Yep.
Yep. Interesting. Okay, let's see. We got a lot of questions from one person here. Let's see. It's really interesting stuff. He said, I used to sell out of the money puts 1 year out to make about 10 to 20% in short put position on TQQQ. Eventually started wheeling TQQQ. How do you deal with the position if it becomes in the money? Do you manage early? What delta do you target?
Um, Sell out the money 1 year out. Okay, so first of all, it's weeklies. So we're doing
Mhm.
weekly puts, and these are flex options, so they're not listed options. So a flex option is a custom option that we get from dealers that we deal with. So, for example, one of the benefits of Yield Boost is you can't replicate that as a do-it-yourself investor
Yeah,
because it
figured.
requires you to do flex options. So the weekly flex, and we typically look at, in terms of the puts, what kind of out the moneyness we would use. We started off doing options that are about one standard deviation out of the money, so that gave some downside. Now we're moving closer to at the money, with the idea that maybe using some of that premium to buy a deep out of the money put to create a put spread in effect. So the strategy is kind of evolving.
Okay.
We're actively managed, so we have the flexibility to do that. But trying to flex, for people that, for example, seem to be wanting more yield, that we can adjust the strategy on that basis.
Yeah. That seems like a good kind of competitive advantage to have that, like you said, the do-it-yourselfers can't just say, "Oh, let me go look at their trades and then buy
Yeah,
these
I do it
themselves."
myself.
Yeah.
Exactly.
Yep.
Yeah.
Um, okay, let's see. TQQY prospectus mentioned selling in the money puts for growth at about 10%. What markets would you look for when selling in the money or
Um,
markers? Yeah.
well, I guess it depends again specifically on what we're trying to do. But the idea again is to give that combination of some exposure to the upside of the product. And you can do that by buying in the money puts. You can protect yourself against the downside by buying an out of the money or deep out the money put to some degree. So it's really again trying to, so some of that language I think people shouldn't sort of read too literally, because a lot of that is to give us flexibility as the manager for the types of strategies that or the strategy that we can evolve. But like I said, what we're trying to do is maximize for yield and minimize the downside. That's really the goal. And it's trying to strike that balance between giving
Mhm.
people a yield that people will think is exciting enough, but not sort of completely submitting to nav decay like some of the others.
Right. It's definitely going to be interesting to see how it plays out. Looks like it's a lot of assets under management that have flown in so far.
It's, I mean, with obviously the two funds have just started, so
Yeah.
TQQY, we're getting there. And again, there's just been, I think, a huge amount of volatility really since we launched it.
Yep.
So I think people are trying to get to grips with that a little bit. But
Mhm.
as we get more awareness raised of these products, as people start to think of Yield Boost, the Yield Boost family, in way of generating yield in the space, certainly it'll become a much bigger brand.
Yep. For sure. I'm thinking about buying in myself, actually. For sure. SPLX, there is a bit more volume in it than UPRO for options. Oh, that's what I think he answered my question from
Yeah.
earlier. Yep. I actually hold UPRO myself, but SPLX is the ProShares one. And if I'm not mistaken, is that
SPXL. It's SPXL. Sorry, I got the.
Oh, SPXL. Yeah, yeah, that's it.
It's
Um,
the letters back to front.
do you have a limit on the amount of leverage that you would do these on? Because well, it's American-based funds, right?
Yeah.
For the most part.
The,
Okay.
the most you can do, the way the market works very simply, is you can have 3 times leveraged on indices, like broad indices, like the Nasdaq or the Qs. That's a maximum.
Hmm.
And you can have 2 times on single stocks, like NVDL or TSLR, etc. So it's 2 times on single stocks, 3 times on the indices, and that's why when we're using options on the single stocks, they will be referencing options that derive their value from a 2 times leveraged single stock ETF. And then for the baskets, particularly with these two, it will be for the 3 times levered ETFs. So TQQQ, which most people know, and SPXL.
Okay. Great. And your expense ratio for these is about 1.07%.
It's the same as all of our products, which is it's 99 basis points in terms of the management fee, and then you have some extra expenses for running the portfolio in there, but it's all 99 basis points in terms of management fee.
Okay. Good to know. Here's another really good question here. Say when you sell in the money puts, do you buy protective puts?
Yeah, again, as the strategy's evolving, we started with at least speaking for TSYY, so it started with the idea of just doing an out of the money put. I think we're evolving more into thinking about not just selling the put, whether it be at the money or slightly out of the money, but also buying protective puts as well. So again, we'll look at what the best sort of option is at the time, no pun intended. But yes.
Great. Sounds good. Yep, this person definitely likes it. Um, okay, well, that's pretty much all the questions we had. Kind of a short list of questions today. Anything else you would like to tell the audience about the upcoming funds?
I think there. I just the main takeaway is the yield boosts, as it probably hopefully means to people, is that yield boost is about generating high yields. So it does that through a very unique way, and it's the first family of ETFs that sells options on leveraged ETFs. So yield boost, just to be clear, yield boost, they're not leveraged ETFs, they're not leveraged funds. It's just the options that they are using or selling derive their value from leveraged ETFs. And the
Right.
benefit to that is typically it's 2 or 3 times the amount of yield, applied volatility of, say, an option on a single stock. So you're generating more yield, you're generating more applied volatility, and that's kind of the trick, is to try and take advantage of that to deliver these high yields. And we do that through weekly flex options, and the family will evolve. We've got 20 funds that are out there that are ready to go. And so we've got one now single stock, one based on the two major indices, the NASDAQ and the SPY. And we'll go forward from here, bring this family to market.
Great. Yeah, that sounds awesome. What would you say, like contingency wise, if we had like a major market downturn, or if the underlying stocks like Tesla suddenly saw, like, say, a 50% decline in value?
Well,
Yeah.
yeah. So there's two specific things. So the first is what happens if you see a big downturn, and all things being equal, you'll see a reduction in the value of the fund, just no different from anything else. You've seen that with competitors that do covered call strategies that typically you expose yourself to all of the downside. And when you have down days, these funds are not immune from that unless they've got some downside protection. So in terms of a downturn, if the underlying typically is going down, then these types of strategies will also go down. You mentioned one specific thing, which is if
Tesla.
say Tesla dropped
Yeah.
50% in a day. Now that is a very specific risk to levered single stocks. So levered single stocks, if you're 2 times leveraged, that's great on anything going up because you get 2 times the return. But on any price movement going down, you also get 2 times the losses. So in a very extreme case, if Tesla was to go down by 50% or more in a day, your 2 times leverage, your 50 would turn into 100, and
Yes,
therefore that would be a full loss. So with an ETF, say for example with TSYY, that is your worst case scenario, that you collect the premium, so therefore the fund has the premium, but if the underlying was to drop by 50% or more on any given day, the fund would lose, almost all of its assets, or maybe even all of its assets.
I see. I
So
see.
hopefully that's a very extreme case, but like all these
Yes.
things, it's definitely something to be aware of, like when you're investing.
Yep. People have to be aware of the risks of it.
Yeah.
Yep. And then building on this, he said, should I expect a decline in NAV? How would it recover?
Well, I mean, again, if you're talking about just if you're talking about selling at the money, then at the money, you're collecting the premium. So, like an insurance company, you're collecting the premium and you're hoping that the amount of premium you collect is more than the movement of the stock. And therefore, that is the so-called recovery. It gets a bit more complicated if there's like extreme moves, but you get a combination of that. If you're also selling options that are out of the money, be it put option, you get some protection there. So there are ways you can do it, but again, I think the best way to think of these strategies is it's not necessarily about providing exposure to the upside, in as much as it's providing those very high levels of income and prioritizing income over capital growth. That's kind of the way to think about it, because like an insurance company, you want to be able to issue insurance policies, collect the premium, and not have to pay out. That's the perfect scenario.
Right.
What you don't want to have is everybody submitting claims, and the amount of claims that people submit be much more than you collected in premium, and that's when you get the NAV erosion. So in an ideal world, you generate that income from selling puts or whatever strategy that it is, and you get some downside protection. The amount of income you generate can be so high with these strategies that I'm not going to say that's your capital growth, because that's wrong, but that's the way to think about the prioritization of yield over capital growth.
Yes. So yeah, like you said, yield
Like
prioritized over
yeah,
capital growth.
like for
Yeah.
example, if you take TSYY, right, and the annualized distribution was 160%. So I
Yes.
think maybe a better way to think of it is, if you want to get exposure to capital growth, this is not the fund to buy. You
Yeah,
should be
for sure.
buying, the stock itself if you want exposure to the upside, or you should be buying a leveraged ETF if you want
Mhm.
exposure to the upside. This is much more about trying to strike a balance by saying, can we give you some exposure to it, plus also a really nice yield? That's what the Yield Boost family is about.
Yeah. He asked another good question here. Would you take assignment for TQQQ with flex options?
Um, no, the flex options are rolled weekly, so
Okay.
it's just a mechanism to generate income. So maybe unlike some strategies in the market, and this is a slightly different way of doing it, that we're not trying to create a long in the underlying. We're not trying to hold, or we do not hold, I should say, the underlying. It's purely, as I said, an options mechanism to generate an income stream from the underlying.
Okay. Yeah, and it's always the weekly.
Yeah, yeah, and then so one of your questions, probably, I'm surprised you haven't even asked it yet, but is, will you be paying weekly? And
Yes. Oh, of course. Yeah.
yeah,
Uh-huh.
that's something that we're looking at, because I think there is a decent case for that, especially when you give the weekly options. So it's
Yeah.
something we're looking at.
It does make sense. Weekly options, weekly payout.
Yeah.
It's a very fast growing trend. I have a feeling the next thing they're going to be asking for is daily. Yeah. Yep.
Yeah. I think my administrator would have a heart attack if he said payments daily.
Right. Yep. But no, I mean, weekly certainly is fast growing. It seems like 3 different fund groups are doing it now.
Yeah.
Yep. So, okay, well, that sounds good. That's all the questions we had today. So, thanks so much for coming back on.
Yeah.
Glad that
Good
we
talking
finally
again.
have Yield Boost out.
I know. I'm glad to have it
Yep.
out too.
Yep. And next time we'll have probably all of them.
Hopefully.
Yep. So, sounds good. All right. Thanks again. And for the
Thank
audience,
you.
yeah, for the audience,
Appreciate
definitely.
all the questions.
Oh,
Excellent.
yeah. Oh, yeah.
Thank you.
And to the audience, please remember to like, comment, and subscribe. Definitely check out Yield Boost, check out Granite Shares, and we will see you all in the next one. Take care. Bye.
Great. Thank you.
Yep.
Bye.
Thanks again.